Ladies and gentlemen, welcome back after a delightful lunch break. Now, I, Tanishq,
And I, Shivangi.
would like to take you forward for an interesting and unique segment of the event, the presentation round. During this round, the speaker will present a permanent topic revolving around universal health coverage, insurance distribution, customer centricity, and product innovation.
Let me have the pleasure of inviting the esteemed experts on the dais. Ms. Sushma Anupam, General Manager, the New India Assurance Company. Mr. R. Balasundaram, Secretary General of the Insurance Broker Association of India. Ms. Harini Kannan, Head Product Innovation and Development, Head Liability and Specialty Underwriting, Liability Claims, HDFC Ergo General Insurance Company, and Dr. Stuart Dawes, Faculty, National Insurance Academy. Please come on the dais.
The first presentation will be delivered by Ms. Sushma Anupam, General Manager, the New India Assurance Company, on journey towards universal health coverage. Before she takes over, let me briefly introduce her. With a career spanning over 3 decades, she held vital roles across the New Assurance Company Limited and has authored the first ever liability insurance manual. Her current focus is on the health insurance portfolio, including a key association with the Rajasthan Health Scheme. Having a BA LLB degree and an advanced diploma in financial management, she is also recognized Fellow of the Insurance Institute of India. Over to you, ma'am.
Thank you. So, good afternoon to all of you all. It's a pleasure to be here and to addressing this gathering. I really thank the Academy for giving me this opportunity. Usually, it is always a challenge in the post-lunch session. So it is believed by many. But I see that, I could not feel that kind of discomfort when I've walked into this hall and when I see all people with lots of, interest, and I feel very encouraged about it because certainly, as it was just told that I had written the first ever liability insurance manual. But I would like to tell all of you all, it's like a confession coming today that this has been something very close to me. Having said that, quickly I will go to my topic. So when we talk of the universal health insurance or universal health coverage, basically, not insurance. So this has been something, which the government of India has been very conscious about it right from the beginning, and we see that if we were to actually assess that what is universal health coverage, if we see the definition which is there, it is moving together to build a healthier world. This was the definition with due focus to access to quality essential healthcare services. It should offer some financial protection. It should be accessible worldwide or to every possible corner of the country. And then it should be culturally appropriate. I think this is something which is almost, encourages our philosophy where we have the different pathies, the naturopathy, we have the Ayush and other associated pathies which are encouraged in the main sphere. Then if we see the journey of the health coverage or the scheme or the thought that has gone behind health insurance or health facilities or health schemes, I should say, not the health insurance schemes or the health schemes that were there. So it started with the, almost in 1946, there was felt a need that there should be some program for the people, at least in the organized sector, at least those who are working. And then that's how the ESIS came into picture, followed by, then we got the CGHS, where it was for the central government employees. So basically all these schemes were, sponsored and all conceived by the government, prevailing at different times. And then we had the National Health Program, where the vision was health for all by 2000. So, all these things just share, and it gives us a thought that health has been prominently in the minds of people from earlier times. It is not something which we see in the current form. The push is there, and we are now able to, get more and more people under the net of insurance, thanks to the different schemes by the government. Then we had the Rashtriya Arogya Nidhi scheme in 1997. So this scheme was basically for all the any very critical illness related expenses. So it was not per se a health scheme for all diseases or all illnesses. So that was the scheme. Then we, again, the National Health Program got further revised with furthermore, emphasis on universal health. That came for the first time in 2003. So that was the idea that it should not cater only to the critical illnesses or to certain segments or sections of the society. It should be open to all. So there we got a flavor of this coverage for everybody. After that came the RSPY scheme, which I think that some of the younger people would not be knowing, even those, at least the people, my generation, they know about RSPY. So that was another scheme which was again sponsored, but each of these schemes had their limitations. So now finally we are currently the scheme that is going everywhere, that is the PMJ, or then we have the Ayushman Bharat scheme which is there. So actually if we see 3% of the GDP is what we look at the health expenditure in total. And out of that, 2% is in private health expenditure, and out of that also 82.5% is towards out-of-pocket expenses. So that is the gap. When we talk of the health mass schemes or the insurance-supported schemes or the insurance programs that are available with variety of products that are there in the market also, with all that also, what we see is what actually we are catering to a very small subsection, whereas a large section is still out of the reach of the insurance protection or any kind of risk protection from any of the schemes. So the missing middle lot has been highlighted by the Niti Aayog also. All the insurance companies are also making quite a lot of efforts. Even the regulator has asked everyone to have more focus towards the missing middle, because that is a huge chunk of population still out of the net of all such schemes. So when we talk of universal health coverage, what was envisaged is a multi-sectoral reform. So with all this background, I feel that the universal health is a good thought. It is something which really is the need. So there are two models in it. One is to protect the vulnerable, which we have seen happening in most of the places where the weaker sections are offered some protection in various schemes. And then there is another model which is basic health for all with a twist, because it is just something people familiar with the other insurance products would, have that idea where we come from. We have a layered structure where there would be some base program, program sitting over it. So something like that, what is offered in such schemes is the government is offering some basic program and supplemented by whatever other features people would wish to purchase and supplement it with. So, as the first model where protect the vulnerable, this was a step towards the universal health coverage. And we had the National Health Authority, we had the state health authorities, then the district level implementation units. So what happened is the states did have the freedom to expand the PMJ scheme, and which it also included the public and non-profit private healthcare providers. And we came with the three different modes of the insurance mode, the trust mode, and the hybrid mode. And there we started with this coverage of 5 lakh sum insured, where it is for the secondary and tertiary ailments, and it is only for the inpatients. So one thing, while we talk of this, that it is for the secondary and tertiary, the National Health Mission always has been associated with the primary health care providers. So that is something, which was always catering to the primary health, and the other schemes that kept on coming, they were catering to the inpatient and the hospitalizations. So what happened in this, actually, in order to monitor the performance also, they had a beautiful mechanism called the impact. And there was a mechanism for the grievance handling also. So all in all, the scheme really laid down very beautiful features to make it successful. I feel that this has been really a very good benchmark and a platform from where the subsequent things kept on improving upon the base model. However, what happened that though we see that 70% of the population is aware of the scheme, only 16% are enrolled, and this is more popular in the urban areas and not in the rural. So actually, where it is more required, those people are still out of the reach. So, but this is not the end of the journey, it is just a beginning. So really, we can see much more happening in this space. So as I mentioned, primary care is always part of the National Health Mission. So, so far what has been happening is that there is no link actually between the two. So what maybe going forwards will be seen coming in, or which can really be of help would be, some link between the two. So that as we all know that the primary health care and a strong investment in primary health is only going to help us in controlling the later disease management programs. So coming to the Ayushman Bharat digital mission, which is key to the future, one thing, it is entirely tech-driven, and it is a single platform for all healthcare services. We also have the unique health ID. So actually, I could not deny myself the opportunity to mention here that New India was very quick in getting ourselves registered, and we are already in the process. So likewise, I would mention that there are other facilities which are getting provided there. It is about the health records. See, as much as we talk of the health ID, the ABHA ID which is created, it is going to be a game changer, because it's something, going forwards, a person will have to share their Abha ID. If the person is not having it, he or she will not be denied treatment, but, the hospitals will have the responsibility to work around it. The main idea would be to have the entire record of the person. So it would be a very easy portability kind of situation, where a person moves from one hospital to another, one insurer to another, but the entire record is available in one click. And then, really the customer gets the benefit of having such a facility, that he does not have to worry about the things that have, the treatments that have been taken in the past and what he needs to communicate and all. So what we see is the telemedicine and teleconsultation, which has really opened up different avenues, because it all started during the pandemic. But, it also gave us that confidence that the OPD, which is hitherto, a bit away from the schemes and from the mainstream insurance products also, can be, tapped, and something can be worked around it. The confidence that came with the telemedicine, teleconsultation facilities has been tremendous. And, what happens is that under this platform and under this digital mission, all it could be the pharmacies, it could be the diagnostic centers, the hospitals, the insurers, the TPAs, everybody in that chain of things is connected. So I feel that this is going to be a real great initiative which is there, and very soon we'll see the success of its taking us to a next level of things. Likewise, I feel that it is also an opportunity for all the insurers for new products and new arrangements, because see, quite a few of the things will be already available if we are integrating with this, and we are all part of the working in the same space, and if all are together, it would certainly give better experience to the customer as well as to us. So next, coming to what actually are the main features or main requirements, if we see, that is the healthcare infrastructure. So that is really something which has come up with these platforms which are available. It gives a lot of encouragement to the hospitals also to be part of it. And that way, hospitals or the diagnostic service providers, the pharmacies, and so many people coming in, that really will build up a robust system which will take this initiative further. So it is, again, as I was mentioning, access to the services, to the workforce, to the emergency response system. All of these things have been thought, and they have been, conceptualized. So, and the idea of equity and inclusivity you find at every stage. So all, different interests are getting included, and there is a lot of parity and a level playing field for different players in different, their own fields. So then I feel that another beautiful thing about this is it is an integrated program. It is taking care of all. It takes care of the preventive health also. It takes care of the primary health services that are required. It takes care of secondary and tertiary also. So hitherto what we were seeing that, each of the schemes was dedicated or catering to a certain single aspect. Here we find that it is, covering all the aspects. So it is all the entire health expenditure is coming into, it's a whole gamut of this thing. And as we say that, we have so many hospitals and even the AIIMS and attached medical colleges that are coming up. So with all this, surely it is, going to scale up, and we will see a lot of exciting things happening in this space. Actually, there are some challenges or certain things which really we needed to take care of, and maybe that is the learning which happens at every stage, and hence the new scheme which comes up takes care of all those things or the past learnings. Like we had in India, particularly if we see that different states have different capacities, different per capita incomes, different socio-economic dynamics. So looking into all that, really, one scheme cannot fit for everyone. One size does not fit all. So with all that learning that has happened, it was really required that we have state-wise some schemes, and that is how it has come. And now that it is there and it has stabilized, really we are reaping the benefits of it. And as I mentioned earlier, the portability part, the Aabha ID and the platform which is provided, that will certainly give that experience to the customers or to the people, that very easily from one to another the transition can happen. What is required is really partnership between the public and private, and because what we see is that there is no regulation for the hospitals, and health expenditure still largely remains unaffordable, and thereby if we talk of the insurance schemes or even for the government schemes run through the insurance model, the viability is always under a question mark or a challenge, or you really see people trying a lot to maintain all the things together. So I think that it is very essential that a effort in that direction should be made. As the vision for insurance for all by 2047 is so much under consideration, I think that what we can do going forwards is, the missing middle is still an area which is not tapped to its fullest potential. So maybe we need to work around it and do something there. That is the space for insurers to work on. Maybe, like as a suggestion coming is maybe if we can, because all these programs, we have a top-up for our own products, but we don't, currently there is no layering or a top-up for products which are in the government schemes. So maybe if something to add to that, or different kinds of add-ons, the way we look at it in the mainstream insurance products and we offer, something on those lines if we can have, I think that would be a great initiative. I'm sure, as we have taken some initiatives long before even the Atmanirbhar policy, the physically or disabled people, some initiative was taken by the regulator. Long before that also, my company, we already were compliant and we had a product for it. All this is because, when you are associated with different schemes, you get to know many things, you understand the challenges there which can be, put to use. So I feel that another area, senior citizens, something, as a company, definitely we are having products. But when I talk of insurance and or the schemes in general, I am addressing all of you. I feel that, it's something as a social responsibility also for us that we should do something more in that space. And then some things are already happening on the common empanelment in the insurance industry. But I think that, going a step beyond it also, maybe whatever hospitals we are already having in the mass schemes and the hospitals which are out of that, somewhere maybe there has to be some bridge, where we are able to link all the hospitals and try and make an effort to bring all of them together. So that, the so-called difference which is there and the, the missing middle is somehow we are able to bring them into the net of insurance. So, as mentioned earlier, like I feel that maybe the OPD, which we all got that confidence, maybe it is time that, even in the mass schemes, because so far the OPD is not covered. Likewise, in the mainstream insurance products also, it is not there. Few products are available, but it is not readily and as, easily available. So maybe, and then more focus should be on the primary health care. I feel that prevention and wellness is going to take the center stage, because the focus will be on disease management rather than having different insurance products or different schemes. It would be, the focus would be towards, having more participation from people in that direction. Maybe if there is an introduction of a copay, maybe, because right now these schemes, they are catering to the people who are at the level where they cannot afford any payment from their side. But there would certainly be people who would be wanting or who would be willing to, shell out some portion of their money and buy some additional protection. So, but right now there is no option to them. So maybe that is some place where the insurers can pitch in and, think about it. So, well, that is the take from my side, and I leave it to the House and to the next speaker.
Thank you for such a thought-provoking presentation, ma'am. Now, I would like to take this opportunity to introduce our next presenter, Mr. R. Balasundaram, Secretary General of the Insurance Broker Association of India and Head of Marine at Gallagher. He has over 3 decades of experience in the general insurance sector. He has also held the position of Executive Vice President at Global Insurance Brokers and significantly contributed to Tata AIG General Insurance Company for nearly 15 years. His academic prowess includes ACA, CS, and FIII distinctions with a commendable All India first rank in the latter two. But before his next presentation, we have Mr. Narendra Kumar Bharandwal, Vice President IBAI, addressing us. Please welcome him with a huge round of applause.
Good afternoon, everyone. Thank you, NIA, for the opportunity. I'll very briefly introduce IBAI to you, and then Bala sir will take over with the presentation. So IBAI stands for Insurance Broker Association of India. IBAI came into existence on August 23rd, 2002, once the IRDA Act came into place and the insurance broker regulations are put in place. So, and IBAI is the only recognized association for brokers in India. It is mandatory for every licensed insurance broker to be a member of IBAI, or else he will face consequences from IRDA if he is not a member. 2002 or 2003, when the first set of licenses were rolled out, we had close to 200 insurance brokers in the country. Today, we have 650 plus brokers in the country. In the last 2 years, post-COVID, we have seen a lot of insurance brokers who are coming in the technology space, insurance tech space, using technology for increasing insurance penetration, enhancing customer experience and everything. IBAI conducts a lot of activities for the interest of its brokers, but primary, more than the members or the IBAI members, the primary purpose of IBAI is to espouse and champion the cause of the policyholder. We look at the need of the policyholder, look at the challenges faced by the policyholder in terms of products, in terms of claims, and other experiences, and represent to Government of India, IRDA, GI Council, LI Council, and everything else. Last 2-3 years, we have started some new initiatives of education and training for our members. And in that line, we conduct monthly webinars. Recently, we conducted a couple of webinars on the new data protection bill, cybersecurity guidelines and everything. And going forward, we will continue to build upon new product skills, especially the surety bond market is coming up, liability thing. I will request Harini Madam to please join our next webinar on liability for IBI. That's the thing. Before I hand over to Mr. Bala sir, I like the tagline of this seminar. I mean this seminar, that is हर घर इंश्योरेंस घर घर इंश्योरेंस. उसके साथ एक और होना चाहिए, इंश्योरेंस ज़रूरी है, hashtag इंश्योरेंस ज़रूरी है. I'm sure most of us have watched the FIFA World Cup last year, right? So what was the most famous or the common ad that was coming when the World Cup matches were going on? Can anybody recall? So we had Sachin Tendulkar and Mahendra Singh Dhoni coming in that ad. Hint. Mutual fund sahi hai, right? So mutual fund sahi hai, to insurance bhi zaruri hai. So we should endeavor. I want to use this. I want to use this platform. I have many colleagues from my fraternity, industry leaders over here and everybody, how we can dwell upon this particular idea of if we have to achieve insurance for all by 2047. I like that logo also where you got various Indian citizens, from the various parts of the country and all. But that's insurance for all is not only for people. Insurance for all should include livestock. Insurance for all should include small, micro business enterprises also. Only when our businesses are secured from where we earn our livelihood, then we will be able to provide insurance for all for ourselves. So this is a few thoughts I'd like to share. And Dr. Agarwal, you should encourage your students to become insurance brokers. You don't have to finish your MBA and look for a job in an insurance company. Insurance distribution is interesting. Insurance broking is interesting. It's a techno-entrepreneurial opportunity. It's a knowledge-based opportunity. So once you finish your MBA, think about becoming a broker. The insurance company market space is saturated. There are very limited spaces, limited opportunities available there. But broking and distribution, the market is open. If 2047 we have to achieve, then only distribution can achieve that, insurance broking can achieve it. Thank you very much.
Thank you so much, sir, for your useful insights. Now, I request Mr. Balasundram, sir, to kindly take over, and ladies and gentlemen, he'll be presenting on digital distribution, a way forward. Over to you, sir.
Good afternoon, everyone. Happy to be here in the present of insurance and the future of insurance, present practitioners as well as the future students out here. So when we walked in here, I'll keep my presentation very brief. So when we walked in here, we saw some very animated and very interesting discussions happening on insurance for all by 2047, reimagining insurance business. And very interesting thoughts came out from the CEOs, like open architecture for agents would help expand insurance. Then there was a thought about sachet insurance. You can sell products. You can attach products to non-insurance products. Then there was an idea thrown up by a gentleman about self-help groups selling insurance. I found a common thread in all this. All of us think that insurance for all means only promoting personal insurances. Every Indian citizen should have an insurance is what we feel. But let me tell you, we are only partly right. What actually insurance for all by 2047 entails, in the words of the regulator. Which one? How does it work? It doesn't work. Which one? It changed. So this is what the IRDA has to say. Insurance for all by 2047, what it entails. Every citizen, every social group shall have appropriate life, health, and property insurance. It's not simply having an insurance policy. Secondly, it says every business enterprise in the country will have appropriate insurance covering its assets and perceived liabilities. Third, it says to make India an attractive global destination. So are we jumping the gun and saying that it is only personal insurances which is called foreign insurance for all by 2047? No, sir. Like Narendra was making a mention about animals. Animals, even in business, I think it comes under that. Every business enterprise should have access to insurance and appropriate insurance at that. That's what it says. So, are the distribution models suggested taking care of all these things to make India an attractive global insurance destination? Means you should have foreign insurers, foreign reinsurers, foreign brokers, everybody coming in, pumping capital, making India a hub like Dubai, DIFC in Dubai, or even in Kuala Lumpur you have a hub. That is what is called for. So the primary motive behind this was to say that insurance for all has a much larger meaning than what we perceive. And there is the scope for every insurance channel to contribute here. And then I will come to my prime area of how brokers can contribute to this. So deciphering the intent. We have seen what the intent was. The statement by IRDA, you can see the circular, that's what it says, insurance for all by 2047. So focus is on both personal and corporate insurances, or it's both retail and corporate. Why I say this? Brokers are often perceived as only selling corporate insurance. Retail insurance, unki bas ki baat nahi hai. They are not interested in selling retail insurance. That's a very popular misconception. Whereas here it says like this, enhanced penetration, yes, obviously, it's quite obvious. Penetration is a must. A larger cake will enable you to get a larger slice out of it also. So we need to enhance the cake size or the pie size. Making India an attractive insurance destination. How will you make it an attractive insurance destination? Yes, regulatory easing, which has been done by the IRDA already. Talent. I think India has one of the best insurance talent, though it is possibly not allowed to bloom in the right way, and that's where we are facing a crunch out here. It's not merely rapid scaling up of the insurance industry, attracting investors from abroad, which I said. And then last but not the least, insurance for all does not necessarily mean that you give an insurance policy to everybody and be done with it. It's not that. It is adding value to the livelihood of these people, adding value to the businesses. So it involves a servicing aspect as well. So it's not merely a distribution or a sales game alone, it involves intensive servicing. So now, having set the context about insurance for all, I'll get into the next part of it, saying that insurance broker is the engine which will power this mission. This is not to undermine any other distribution channels. Everybody has a part to play in that. That is what the context here is. So to categorize an insurance broker as primarily a person or a firm which specializes in corporate sales would not be correct as the simple submission. So at present, 1/3 of the market, 2,55,000 crores, is controlled by brokers, out of which all of us know the three major drivers are health, motor, and crop. Health and motor brokers do play a very big role today. So they are not essentially corporate players. They are in the retail space as well. Crop, yes, more needs to be done, and we are also working out how it can be done, how brokers can increase their presence in the agriculture segment. Technology, yes, talked about, and as Mahesh pointed out very rightly in the morning, technology has two components, one for selling and one for servicing. On the servicing side, we have harnessed technology to some extent, but still a lot needs to be done, and we can do a lot about it. As far as technology in sales is concerned, brokers have invested billions of rupees in creating platforms which sell insurance. And again, let me hasten to add, when I say digital platforms and technology, I for one personally, I don't think this is an IBAI opinion, this is my personal opinion. I would say that India is still not ready for 100% digital buying. It is always going to be phygital. There cannot be 100% digital buying. So, because there has been a perception created that people do not buy insurance or there is less of insurance penetration because people are not aware about insurance. How many of you agree to that? Number one. Number two, it says insurance is expensive, affordability nahi hai. And the third thing it says is that accessibility. People do not have access to insurance. I think all three factors have been made major pillars, and we are striving to work on all three. So let's come to awareness. Awareness, a lot needs to be done. Indians are eternal optimists, so they think, "Mujhe to kuch nahi hona hai yaar. Uske aag lagi hai to lagi hai. Mujhe to kuch nahi hota hai." So that's the sort of thing we have. Second step is people like you and me who are aware of insurance, we can afford insurance. Have we got optimum insurance coverage? The answer is no. Why? We buy the mandatory insurances. For a car, we buy not only the third party, we buy a comprehensive coverage because gaadi to thokti hai kabhi koi. That's why we buy it. Health insurance, yes, now we realize it's very important. Even if our employer covers it, if he doesn't, I also buy my own insurance, so that's fine. But what about other insurance, like a householder's insurance? No, not interested. Life insurance. Life insurance, when the agent comes and tells me that you need life insurance for such an amount, and the premium will be this much, I feel I should starve today so that after I die, more money comes in. So that's the way it is. So awareness, yes, we need to increase awareness. But at the same time, I will take from Sushma's presentation one point. On PMJAY, there was a mention, 70% of the people are aware of it, but only 60% have enrolled for it. Why is that? I think we need to introspect a little. Means you and I are aware of insurance, we can afford insurance, but still we don't buy insurance. What could be the possible reason? One possible reason I could think of is that the entire process of not buying insurance may have got simplified, but then getting a claim, the experience is not very comfortable. Be it a health insurance claim or a small car claim, TV claim, any claim. Yes, insurers have settled 17,000 crores of claims, no doubt about it. They've done a good job, especially during COVID times. Claims do get settled. I don't say no at all. But the experience, the process is deemed cumbersome. I will not call it dissatisfactory, I will say it's cumbersome. So that's why we don't buy insurance. Accessibility. Accessibility, you just make a mention that I want to insure my vehicle. You will have 10, 15 people calling you daily. Even without announcing it, you get pesky calls. So accessibility is definitely there. But still, if people are not buying insurance, there is something which we are all missing. So, and digital is not the answer there. It has to be phygital. Somebody has to push the sales. Like for instance, today if you see, all the reforms which have taken place, very welcome reforms, like we removed the expenses of, we created an expenses of management limit, no limit on commissions. We said use and file guidelines for products, ease of doing business. That's the buzzword. You start sandbox, You name it, you have it. You want multiple tie-ups for corporate agents, have it, take it. All the ramp up is happening on the supply side. What is being done on the demand side? How do I create the demand from the guy? He's not buying. So number of brokers today are around 637 and 80 more are on the pipeline. So they feel that they will definitely add value. So all I'm trying to come back and say is that a broker's role in the penetration, be it of retail, be it of corporate, can never ever be undermined. So are we missing the wood for the trees by thinking that it is only a retail thing which is being pushed? No. What happened again? Okay. So this is a geographical spread of brokers in India. So insurance penetration could be selling more policies to an existing insurance buyer or attracting new buyers or achieving a greater geographical spread. And this is the geographical spread of brokers in India, which is just a map for you to see. So we are present in almost all states, though you see that the Northeast is not very well represented, which may be true of other businesses as well. So who is an insurance broker? First of all, let us understand that. I've talked about the basics. We talked about insurance for all by 2047. Let us now talk who is an insurance broker at all. People think he's another distribution channel. He is not. A broker does not sell the product of any particular manufacturer. He advises the client which product to buy. So a broker does not sell product of any one particular insurance company. He goes and sells it in the market, unlike other insurance channels who have that sort of a limitation. So brokers act on behalf of their clients. In fact, the only channel which acts on behalf of the clients and provides risk management as well as insurance placement advice is supposed to be a specialist in insurance and risk management, though I will take that with a very large pinch of salt. Not all of us could be, but then we are well on the way to doing that. A broker will help you identify your individual business risks to decide what is best for you. And there have been instances when the broker also says that this particular risk need not be insured because the cost-benefit analysis doesn't work out. You carry it to your books. So the risk transfer also needs to be quantified in terms of a cost-benefit analysis. Brokers can help arrange and place the cover, which is one of the jobs of a broker, that is placing the cover, the appropriate cover with the right insurer. Unfortunately, even today, that is perceived to be the main job of a broker, getting the L1 quote and placing it with one insurer. So again, I'm telling you, brokers are not being fully utilized by clients, which is fast changing, but again, it will take time. So brokers provide claims advice. Okay, this is all the current broker. A quick slide on what the broker will be by 2047. It will be more advisory, specified areas, ESG issues, regulatory issues, legal issues. He has to advise the client because businesses are becoming more and more complex and driven further by geopolitical issues. This is a problem. Best international practices can be brought to India, both in terms of products, services, and practices. Structured bespoke products, as I said, a broker does not sell a particular insurer's products. He understands the client's needs and structures products and goes to insurers to say who can give the sort of a product which he asks for. Risk improvement consulting and personal well-being programs. It was talked about in the morning also, where I think Nilesh said that wellness programs are becoming more important as far as health goes. So risk improvement, not only on the property side, but even on the wellness programs on the health side is important. Work with insurers in product development. Manage limited underwriting and claim settling authority. This is going to happen in the future. Because as businesses grow bigger and bigger, insurers cannot keep adding fixed costs to their books. They would like to push it as a variable cost to brokers or other intermediaries who can do part of the work for them, and it becomes a totally variable cost. Only if the business comes in, they pay, otherwise they don't pay. So this may need regulatory interventions, but it's going to happen in the future. Brokers today, I said they have got a very sizable share of around 33% in the non-life space, but in the life space, their role is very limited. Whatever may be the historical reasons, whatever may be the apprehensions, I'm sure that's going to change, and brokers will play a major role in life, gratuity, and even in the pension space. When there is talk about a composite license for an insurer to sell any other financial product, the day is not far off when the broker will be allowed to dabble in all other financial products as well. And at a very, very conservative estimate, I feel that at least 60% of the non-life market and 20% of the life market by that time would be controlled by brokers. Brokers will become, there will be giant broking companies, which could be bigger than insurance companies, some of them. Some of them could be multinationals. Some of them could be homegrown brokers as well. And these brokers would achieve scale not only by organic growth, but primarily by mergers and acquisitions, which is the way forward. Scaling up is the biggest problem today for any small broker. Okay, so that's going to happen. Regional level broking firms too, yes. There was a talk in the morning about specialized insurers doing one particular thing. We'll have regional brokers operating in particular regional areas also. More emphasis on technology, obviously, connecting the different brokers, other stakeholders in the industry. Insurers will pass on more responsibilities to brokers. That's what I said earlier also. Personal insurance, even after another 24 years, will continue to be a push product in India because Indians are born optimists. Mujhe kuch nahi hoga, that's the thing. So you need somebody to push people to buy insurance, and there I say the broker plays a very major role. And the way forward, we feel, is that it will be a phygital progress, which can be a quick progress, and not purely digital as far as sales is concerned. That's all I wanted to share with you. Thank you very much for a patient hearing.
Thank you, sir, for such an insightful presentation. Now, I, Shreya, would like to introduce our next presenter, Ms. Harini Kannan. Ms. Kannan is the Head of Product Innovation and Development and Head of Liability, Casualty and Specialty Underwriting at HDFC ERGO General Insurance Company. A significant portion of her career spanning 16 years was with Swiss Re. She worked as a vice president and a director of property and casualty reinsurance in India. Her international acclaim is evident with her stint as head of agriculture reinsurance for Asia Pacific in Singapore. Postgraduate from National Insurance Academy, she combines her insurance acumen with her foundation knowledge in IT from Stella Maris College. I now request Ms. Kannan to begin her presentation on product innovation. Over to you, ma'am.
No, I'll to use this. Does this work?
Just a second.
Okay, thanks. Thank you for the nice introduction. And feels obviously very nice and nostalgic to be back because I'm a pass out from the first batch of NIA, and I remember 20 years ago we were very busy, organizing the very first insurance summit. And I can tell you, my career and, everything I've learned and built is on the strong foundation and collaborative platform offered to us by NIA. So, here I am, and always, every time I come back to a forum organized by National Insurance Academy, it's very nostalgic. Thanks for giving me the opportunity. I just wanted to probably take this time over the next 15 minutes to speak about product innovation. I think a lot of concepts we've heard in the earlier sessions. We've heard a lot on health, digital disruption, insurance for all by 2047, what it takes for us to get there. But what does it mean when we, speak about product innovation and disruption, right? I think we are, as an industry, it's pretty imperative for us to innovate and change right now. And I think it's largely also because we are impacted as a country and industry by a lot of wave of changes happening at the macro and at a micro level. Be it global, industry changes, local changes, industry-specific, allied industries to insurance are very critical as well. And very market-specific changes are leading to a lot of changes in the way risks are shaping up. It's become pretty unpredictable in terms of how consumer trends and demands will change as well. So I think if we have to stay resilient and offer relevant solutions to consumers of the future, it's very critical that we innovate and innovate very quickly and now, right? And I think for me, as a representative of an insurance company, it's very critical that innovation needs to be embedded in the insurance company's DNA. I'm sure for brokers and others too. I'm speaking more from a insurer's perspective. But as I was making this presentation, I was just thinking about, are we really, as an industry, embracing innovation, right? We've, looked at health, we've reacted to what the market needs are, we've looked at motor, largely regulatory driven, we have reacted to what the market needs are. But then I look at, something like cyber, which is a very, very new risk that has evolved over the last a limited period of time, right? 5 to 7 years, it's sort of reshaped very dramatically. And, that's growing at a market growth rate of about 25% year on year. What happened to COVID? I mean, apart from obviously product demand for health after COVID also led to rapid digital transformation and engagement with our customers and agents. So I think a lot of initiatives in terms of customer engagement, the way we look at products to address risks have been evolving, but are we doing enough is the question. And to be very honest, for an innovation to deliver sustainable growth, it really must be embedded in the company's growth mindset, right? For it to be fully integrated across the organization and deliver solutions. I just want to dwell a second on disruption as a topic, right? And I think for me, as I also spoke about or thought about it, disruption in product innovation typically tends to be dealt with care, and largely because disruption, along with the opportunities that it brings, also brings across a host of risks, right? Unless you are able to understand the market opportunity very well, not just understanding the market opportunity, but also making sure that you are communicating the value proposition to your clients effectively. It tends to become, an overarching, staggering statement as well. So just as an example, not too long ago, about 4 or 5 years back in China, Ant Financial's, entity came and launched a platform to provide very simple, basic access to health covers for a significant amount of customers, right? And within a few weeks, it attracted more than 100 million participants. But, what happens now? These programs are almost winding down right now. Largely because they either encountered regulatory scrutiny or, the target population was not a healthy mix of young and healthy members that you had to target. Some of them dropped out, adverse selection happened, loss ratios went up, and hence the costs borne by the existing participants went up. So disruption is good, but unless you basically understand what your target market is and you're able to communicate your value proposition, very well or articulate them, it becomes not so effective. So, as I was preparing, for this presentation, I sort of thought about where can I find some interesting material to not look at innovation now, but what it holds for us in the future. And obviously, going back to my earlier days in Swiss Re, I used to get a lot of, I would say, I used to get inspired by the Swiss Re Sonar report. And Sonar report comes out every year, and it really talks about a lot of, emerging risk themes over, say, a 3-year to a 5-year horizon that can impact the risk landscape globally. But a lot of, you see the image here. I'm not going to go through all the points here, but some of the takeaways for me, which are, more close to us in India, is what I've highlighted here. And see, these risk changes come across 4 different dimensions. And why I'm spending a lot more time on, risk changes is because risk landscape is because that is sort of the bread and butter of what drives your innovation, right, and product development. So if you really look at risk landscape and everything that drives these factors here, they are largely around, say, demographic and social environment. We spoke a lot about, ma'am, you spoke about the growing middle class, missing middle. We spoke in the earlier session about longevity. A 100-year life is not a myth anymore. It's really a reality with all the medical advancements. We look at mass urbanization, migration, but also a lot of civil unrest happening. So that is one dimension, right, that drives risk landscape. The second thing is obviously your political and economic environment. I mean, you have macroeconomic changes in, interest rates, you have inflation, geopolitical scope. So that is another dimension that drives your risk landscape. The third and most important is also technological and impact from the environment. And here climate change is a topic. Then looking at transitioning to a low carbon economy, we have a lot of commitment towards the growth and the emergence of renewable energy, not just wind and solar, but we talk about green hydrogen, sustainable energy, circular economy, data as an asset, generative AI, much more than chat GPTs. So all these, are another, blend of drivers that evolve and change your risk landscape. So I think with all that in the background is where, I found the Swiss Re Sonar 2023 report to be pretty interesting. I just want to dwell on probably 1 or 2 topics here. And I think longer lives and medical, advance is something that is very pertinent, right? Several advances in medicine is leading to longer lives, changing your mortality, morbidity expectations as well. And definitely this creates a lot of new opportunities, right, from long-term care, insurance to innovations in life insurance covers as well. But to be very honest, there are also uncertainties in the outcome of these innovations, right? Right from disease detection, innovations in diagnostics, for example, drug development. And with all these rapid innovations, it's also becoming more and more difficult to predict with certainty, the impact on mortality and morbidity. So then, from a liability perspective, this could lead to a lot of medical malpractice, product liability claims. So there's a pro and con, right? Opportunity in terms of longer lives, but also what that means. So I think what I'm trying to say here is, any change in trend gives you multiple opportunities to think from different dimensions. And this is a reality for us in India as well. Longer lives, growing, aging population. I think the second thing, that I want to underline also is pandemic. I mean, of course, we are off COVID and our memory is as little as a 2-year-old. We've moved on in life, but I think if you look at the current avian flu outbreaks across the world, a lot of migration of virus from animals to humans, for example. It's not theoretically impossible, but I think none of us anticipated COVID to be possible. So pandemic, and the learning from COVID-19 and the impact it had, especially on the health and the life insurance industry, largely should keep us thinking about what can happen in case of an extreme pandemic or epidemic, with travel and lockdown restrictions again coming in, leading to disruptions in supply chain and financial markets. So that is another risk which is really there, and we've learned from it, and how we evolve and manage that risk is something that I want to highlight on. So I think we've heard enough on climate change, but what is more interesting that I want to highlight is this aspect on hooked online, right? It's obviously an evolving cyber risk. I mean, all of us sitting here at any point of time, we just can't keep our smartphones or tablets down. I mean, we pertinently, either are on social media platforms, we want to comment, connect, consume, information constantly. But what does it mean? I mean, we're on so many attention-grabbing online platforms, right? And typically that really weighs on people's ability to concentrate and clearly has a very, very strong linkage to poor mental health. And you obviously have companies profiting from exactly this aspect, right? And overuse of digital platforms clearly can lead to depression, anxiety, sleeping problems. I mean, what does it lead to? Long-term mental health issues, disability, also leading to adverse deviations in mortality over a period of time. So I think this is a very underlined topic, but given how, as a country, we are consuming data on internet, we are on multiple platforms, on social media, the risk of, hooked online, especially with the work that we are doing to cover mental illness is something that we really, for at least the future generation, be more thoughtful of. Another case here that I want to highlight is on circular economy. And I think most of you might have come across this, but circular economy is really a market where products are really recycled, right, than scrap. So typically also avoiding extraction of new resources. All forms of waste, be it metal, scrap, obsolete electronics, they're all returned back to the economy and used more efficiently. And there is a lot of, market in India towards that, right? I mean, we're looking at a lot of refurbished mobiles, significant amount of usage in terms of recycling as well. But what does it mean? I mean, and where does the responsibility for product safety from either the original producer's end or responsibility for a recycled product transfer to the new producer? So these are all evolving liability risks within that ecosystem of circular economy itself. And I think last but not least, right, I think all of us must have used ChatGPT. I mean, I honestly swear I didn't use ChatGPT to make this presentation, although I was very, very propelled to at least try, but I said, no, not this time, I wouldn't do it. But see, ChatGPT or, generative AI as a topic opens a lot of opportunities for underwriting and claims processing, be it fraud detection, automated data insight-driven underwriting. But it also raises a lot of questions on ownership and associated risks with data. Who owns what, right? What is the quality of data? And more importantly, what are the biases behind some of the decisions that drive from generative AI? So I think might look like slightly off topic for you. I mean, it's not your bread and butter presentation on product innovation on what do you do in motor health. But I think, as an individual or as a company, when we look at product innovation, we look at risk landscape and really look at, aspects in it that could drive relevant solutions for consumers. But I really felt, you should take a look at the Sonar report, and it's a very interesting, read on a lot of topics which could impact us as a country and as a ecosystem in the next, 3 to 5 years. There's another report I read, and this report was a McKinsey report, and here, they did a benchmarking exercise. This was published a little earlier in the year, and I found a lot of relevance to this as well because McKinsey, together with the IRDA, did this wonderful work to benchmark India and comparing us against a set of selected countries on various insurance metrics to identify, opportunities and gap areas, and also look at best practices. So, and then the report also very nicely recommends initiatives that we as a country can take to achieve IRDA's goal of universal insurance by the time we turn 100 years as a country. So, we were benchmarked against China, Malaysia, Thailand in terms of emerging economies, and then USA and Germany in the perspective of mature economies. So what has really happened here is we've learned a lot of insights on major gaps across health. motor, property, and SME lines. And a survey was also conducted among insurance agents to really look at what is the primary reason for this gap and what is it that we need to be working on. So this is pretty self-explanatory, and I won't go through all this in detail, but I'll just highlight maybe 3 or 4 points on motor health and property, and very relevant areas to be leading towards product innovation as well. So if you look at health again, ma'am, you really said spoke about the out-of-pocket expense, and the gap between your spending to coverage, and in fact, in a country like India, penetration in other countries is almost 5 to 15 times higher than what we have. Definitely in developing countries like China and Thailand, it's 2 to 3 times more than what we have. So I think the whole point here is we spoke also about OPD, right? OPD accounts for about 62% as per the survey of the total healthcare costs in the country. So a lot of the recommendations here, go towards how do you ensure, and I don't want to repeat this because a lot of these aspects are completely covered by you, looking at either lagging healthcare infrastructure, how do you ensure that you collaborate better with healthcare providers, streamlining the costs, what do you do in terms of ensuring that you have a lot of tech-driven innovation to deliver the insurance solutions, especially for OPD covers. I mean, we as a country are also pretty high in critical illness, be it diabetes or cancer. How do you ensure that you have adequate indemnity or fixed benefit covers for critical illness? So the report came back with a lot of interesting suggestions and benchmark with other countries. So also an interesting read for us as an industry. In motor particularly, I mean, motor insurance in India stands at about 60%, I think increasing, with two-wheelers encompassing a large portion of the uninsured vehicles. So while most of the new vehicles are, insured at the dealership or the OEM at the time of delivery of a vehicle, largely also long-term, third-party insurance being in place. The issue also is a very weak own damage cover, and the renewal rate is very weak. And one good example that came out from this report was, Germany. Germany, the traffic authority in Germany is notified whenever an insurance policy isn't renewed after expiry. So you have really the law enforcement proactively going and stopping you even before you doing a violation, right? So I think a lot of interesting insights on how can you do more to engage with your customers, how can you improve renewal rates, how can you ensure that there's higher coverage for two-wheelers and also own damage cover. And, if you look at property covers, we as a country, clearly are very disaster prone. We have one of the longest coastline in the world and pretty much vulnerable to cyclones and tsunamis, right? And a sizable portion of our industrial assets are also exactly in these areas. And I was earlier managing corporate claims when Biparjoy happened, and you can imagine the cyclone in the Arabian Sea to that extent of intensity, hitting the coastal areas of Gujarat, parts of Rajasthan, and before it steered away, and affecting significant amount of ports and industrial assets there, calls for much more coverage increase for property insurance. And it's not just about large corporates, but clearly also speaks about the divergent and emerging needs for SMEs and MSMEs. So I think some of these NatCat covers are not just dependent on the private industry. There's a lot of work that needs to be done on public-private partnerships. So a lot of countries, Turkey is a good example where they make mandatory earthquake insurance to help the government's burden, lessen the government's burden when you have to provide disaster relief. So I think this is, another insight that I wanted to bring. The first slide was more on emerging, risk trends, and, this is a little bit more on what can we do immediately to close the protection gap. And then I think when I sort of looked a bit more on, what could be really those 1 or 2 ideas, right, that we as an industry can work on. Then I went online and generated a bubble cloud word with some of the thoughts that I had. And this is what, came out. And I think for me, some aspects stick out very strongly here. So one is, as I said, products are created around emerging risks and evolving consumer trends. So you see things like cyber, circular economy, climate change, shared mobility, autonomous vehicles are going to be a reality, be it electric vehicles or anything to do with sustainable solutions. IoT as a topic, more and more involvement of technology in remote claims inspection, agriculture, not just crop, but livestock and aquaculture as well, long life, evolving health risks. So all these are clearly what comes out in the word cloud for me. I think so products are really created around emerging risks. The second thing is simplicity of products, and I think you mentioned this pretty well, and thereby innovation is really around this, right? So there's a balance between requirements of a simplified journey vis-a-vis data collection and underwriting. So you can also think about our industry on the banking side, right, where despite all the innovation, markets really rewards bank who've been able to demonstrate sustainable growth. So it's good to identify, but making sure that you simplify products and address and offer them to the target market is extremely critical. But let me also tell you, timing is a very important aspect, right? So lead time to introduce products is expected to not be more than 3 to 6 months, and obviously competition can replicate the product almost immediately, right? Thus it's very important to capitalize on the opportunity fully, time the opportunity of your product launch, and ensure that you capitalize on that opportunity well. So I cannot close this without saying about the regulatory landscape, right? So which is encouraging innovation, be it the sandbox or doing away with guidelines on file and use. Regulators have given us the freedom to build and launch really truly innovative products. And I think what is very critical is companies need to have a good governance around product design to ensure customers are treated fairly. And that is very important because at a lot of times you can create solutions without thinking the impact that it can have on your potential customers and target base. So I think while we have the freedom, I think with great power comes great responsibility. So also a fan of Spider-Man. So I think that's exactly the whole point around regulation, right? Which is around self-governance and self-regulation as well. I think technology clearly aids innovation, right? We've got a lot of data, consumer data from multiple allied industries where we can draw insights on. And it can not just help us develop new products, but it can also help us enhance our overall effort and outcome, right? But to be very honest, we as an industry don't make full use of the potential data that this data can offer. And speaking more about mass and hyper-personalization of data, a company like Paytm or MobiKwik with the consumer insights they have, I mean, if truly we can make utilization or collaborate and understand that data better, I think the need of the hour from a retail product perspective is also sachet, yes, of course, but also mass and hyper-personalization. I want to have a solution for my needs, my behavior, my intent, the way I want to deal with life. And this doesn't, call for someone sitting with me for hours together to underwrite and structure a product, but really use the data that's available in the ecosystem wherever I consume data. And I think I can't not comment on we as a country doing our efforts on India's stack, right? I think you also see that here. We probably are pretty brilliant as a country. The government has laid out a set of open APIs and plenty of digital public goods that is meant to bring the entire population into the internet age. So there's going to be a significant amount of foundational elements in data in terms of identity, payments, networks, platforms like ONDC, which are going to be available for us to collaborate with and develop new solutions. But I think with this, I think what I want to highlight also is the respect for privacy. We've got our DPDP, Digital Payment Data Protection Act in place. Global laws are expected to be formed, which will clearly have a lot of ethics and governance around the way we use data. So I think, with this, I just wanted to reiterate and summarize the topics that I have touched on, be it long-term health, be it disease management, telematics, climate change, parametric covers, tech-driven insights, cyber, obviously, environmental and public liability, and a lot more that needs to be done on customer engagement. And all these are clearly innovation opportunities for us right now, but also clearly, in the foreseeable future. So I think with this, thank you very much for your time. Happy to take questions. Thanks.
Thank you for such an enthralling presentation, ma'am. I, Priyanka, would like to take you forward to the final presentation by Dr. Stewart Doss, Faculty, National Insurance Academy. Let me take this opportunity to introduce him briefly. Dr. Stewart Doss is a distinguished professor at the National Insurance Academy, specializing in actuarial science, enterprise risk management, and risk modeling. With an academic foundation of M.Com, M.Phil, and a PhD, he has dedicated over 30 years of training, teaching, research, and consultancy. As a recognized PhD guide at Savitribai Phule, Pune University, Dr. Doss's expertise encompasses service quality management in life insurance. His professional prowess is further highlighted by his fellow in general insurance and diploma in casualty actuarial science. Globally acclaimed for his research, he has presented papers and organized significant seminars and workshops worldwide. I now request him to kindly take over, and ladies and gentlemen, he will be presenting on sustainability through customer centricity. Over to you, sir.
Okay, thank you. Thank you for nice introduction. And anyhow, I'm the last speaker of this particular round. So I'm just replacing Mr. Deepu, who could not come because of his sickness last minute. So yesterday only I was told that I have to speak on this topic. Okay, so whatever came to my mind, I've just summarized. Just maybe 10 minutes, I'll quickly rush through. Okay, I'm sure that my student Harini has covered a lot of things what I have put in my presentation, so I can run through. So this, it's really, I mean, you have set the background. I mean, so I start with this because, so the reason why, if you look at the definition of customer centricity, it talks about involving customer at every stage, whether it's product development or it's underwriting or it's claim settlement or a loss assessment or a risk management. At every stage, the customer has to be taken into account. And the whole, the insurance core operation should really evolve with the customer insight. And now when we really consider the customer insight at every stage, what we need to look at it, what are the changes that are taking place globally today? If you look at it, climate change, as Harini pointed out, is not one risk which is impacting. You can see the interrelationship between the climate risk with pollution. You may be aware that in India, every year there are more than 4 million people are dying out of pollution. So the air is getting contaminated, the water is getting contaminated, the food, fruits and vegetables that we consume is also getting contaminated because of overuse of pesticide and preservatives. And over and above, you can see that we all know that the impact of the climate risk on the NetCat events last 10 years, if you refer the SUSRI statistics, which indicates that more than 30% of the increase in the frequency and the severity of the NetCat events, increasing the flood. Earlier it was 1 out of 3-year event has become now 3 floods in a year. So that speaks about the change that is taking place on the one side. The other side is the customer, it's the segment itself is undergoing a tremendous change. If you look at the customer demography, the way that it is changing, You know that India is one of the youngest country. We have more than 70% of the population under the 35 years. And also we are also growing on the, the high net worth individuals. Latest statistics says that we have over 15% of the population which is growing on the high net worth individuals. So one side, the high income population or affluent population is growing, and on the other side, the pandemic has impacted the bottom line of the people, particularly the low income people and BPL segment, and that difference also is increasing. And what it indicates that is we need to really look at the change that is taking place, and whether it's a product development or underwriting, or is a loss assessment, or is it a claim settlement, or a customer engagement, at every stage, whatever changes that are taking place, we have to really incorporate that. So that is what I will just summarize. Now, already you are aware that RBI has implemented blockchain technology, and if you look at how it is going to disrupt the insurance industry in the coming years, you can clearly see that, to operationalize blockchain, what is required is a consortium need to be created. In India, you may be aware that, IBM, one of the company, they implemented the blockchain solutions for the UK insurance market and also the reinsurance industry. They wanted to implement the blockchain. We also wanted to have a kind of a consortium, but that could not take place because of that. There is a delay in adopting blockchain technology in the insurance industry. But the moment the blockchain technology is implemented, you can say that what it will create is an integrated ecosystem with every players in the market. So whether it is a customer, because it will pull in whatever the required customer data from the customer page, and whatever the medical data that is required, will come automatically flow from the hospitals and the clinics, and also the regulator approval. What we have is automatically you will get in for the product that you develop, and also your operations can be ensured that it is complied with the regulation, and the TPA data will also automatically flow into the ecosystem. So it will have a more integrated ecosystem, which will create a smart contract to be designed in the insurance. So what does the smart contract, does? So either it's a premium deduction or a risk design, or is it a loss assessment, or is it a claim settlement, every process will be automated. So that is what actually the blockchain is going to, create, and it will reduce the fraud, the leakages to a large extent. On the one side, it will improve the operational efficiency. So why I wanted to discuss about blockchain was, when we talk of the sustainability, how do we make the insurance operations, sustainable in the long run? If you look at the insurance industry, the general insurance industry in particular, last 5 years, if you look at the amount of underwriting losses that the industry is generating every year, is going up by 4,000 crore to 7,000 crore. And the last statistics indicate that total underwriting losses the industry suffered was around 24,500 crore. And still we are generating the net profit merely because of the investment income. So it is the investment market which is really, bringing the profitability to the insurance industry. So definitely the blockchain technology, will reduce the cost of operation to a large extent. In the morning also, all the speakers emphasize that the industry is incurring a cost at the rate of 25% to 30%. Now the blockchain will straightaway reduce the cost to a large extent. Second, it will bring the operational efficiency. Third, it will also allow for coming out with new products. Now, Harini talked about a lot of emerging risks. You look at the emerging risk, which suggests that there are every risk which provides opportunity for insurers to come out with a new product. Okay, so I have also listed out some product gaps which are already there in every segment. If you look at those product gaps, definitely technology is the solution, which will enable the insurers to come out with the new products in the years to come. Now, second, how the underwriting, efficiency will come out. Now you can see one of the company, they have used, extensively the customer data, particularly the CIBIL score, and they correlated the CIBIL score with the motor accident rate and health morbidity risk. You can see a higher correlation between the credit score and the health incident rate. You can see higher the credit score indicates that the incident rate is very, very low. So that indicates that when your credit score is very higher, the person who are having a high credit score, they are very, very, disciplined, right? And they are very, they maintain the health very well, and they pay their debts very well, so the mental stress level also is very low. So that indicates that the morbidity rate significantly reduces when your credit score is very high. And you can look at that kind of analysis they have done, the age versus the accident rate. That plays very important role. You can see that when the age increases, the accident rate comes down drastically. And also, the last analysis, you can say that they did analysis with the mobile phone and what is a kind of a relationship of the mobile phone with the incident rate, the health incident rate. You can see that probably it is higher the income level, higher is the utilization rate, so higher is the claims outgo. So it's just an indication that how the data intelligence can really help in not only improving the underwriting, it can create a credit score. Just a couple of weeks before we attended the India InsurTech event, and where we had a presentation by the InsurTech firms on various areas. Now, one of the area was on the product innovation, and see how the new products which are going to be developed through the technological solution. Now, this is not new. Many companies now in India has implemented already picture-based motor claim settlement. When the claim amount is less than 50,000, now what you need to do is just take a photo, upload in your mobile, right? Your claim amount is determined. Now, my point of view was that can the same application be used in whether it is crop survey, whether it is personal loss assessment, whether it is individual accident. So whether the photo-based assessment can it be introduced. The AI and ML, particularly the predictive analysis, can help the company to come out with such kind of advancement in the claims. Now, what are the product gaps that you can see? The understanding the customer need is very important, because we had seen that the market is changing, the risk landscape is changing, the customer needs are changing. So what we need to come out with is to align the product according to the changing needs of the customer. So how do we do? One of the examples that I can share with you, you are aware that PMFUI is one of the very successful crop insurance scheme implemented in 2016, right? So even though the scheme is one of the very best scheme in India, when we went into a field level survey, interacted with farmers, the farmer said, the product actually doesn't meet my need. When we asked them, why do you say the product is one of the comprehensive? Because it covers the sowing failure, it covers the natural calamity losses, it covers the localized calamities and post-harvest losses. It is one of the very comprehensive product. the farmer says that the product doesn't meet his need because the way that the risk is behaving, it is changing from one season to another season because his cultivation practices are undergone a change. And the product covers only the 2 seasons, whether it is a Kharif season or Rabi season. What is happening is because of the climate change, the sowing pattern has changed drastically. Okay, so because of that, the farmer says that I'm cultivating my crop in the month of May, in the month of April, and your policy, doesn't cover me. Okay, so that is one reason that what indicates that crop is an example in every product, whether you take motor insurance, whether you take cyber insurance, in every product, there are gaps which are there. And how do we really align these gaps? I mean, how do we reduce these gaps by aligning our products with the customer needs? That's what is required. Of course, property is one area where everybody talked in the morning. The protection gap is over 90%. The latest SUSRI report says by the year 2021, the protection gap, net cut protection gap was 95%. So that, and if you look at the kind of products that are available today, it doesn't address the property, the protection gap, because we don't have exclusive climate risk insurance in India. Okay, so we don't have single peril catastrophe cover. If an area is prone to a flood, what they need is they want a flood insurance cover. But whereas the current products that are available, the minimum perils that are covered under the policy is running into 12 perils or 15 perils. The customer or a government says, why should I pay premium for 15 perils or 12 perils? Can you not customize the perils according to the regions, right? So this is one area which needs to be addressed. And health insurance, again, Madam has already talked about OPD. I'm not going to touch upon. Mental illness is another area where the gap is very, very high, because the recent statistics say 24% of our population is suffering from mental illness. And particularly after the COVID, this has really gone up. And crop, I talked about, there are still a lot of areas where there is a need for a comprehensive crop insurance cover. We don't have right kind of product for horticulture insurance. We don't have a cover for a cash crops. I mean, what we have is a weather-based insurance for a cash crops or for a horticulture crop, but you know that a single peril weather-based policy will not address those risks. So you need multi-peril cover where the basis risk is minimum. Okay? And we don't have a cover for a market price volatility, okay? And we don't have a cover for a revenue loss protection, particularly for a cash crops like coffee, tea, rubber. The market price is very high. What farmer look at it? Can we have a revenue loss protection? Cyber, of course, Harini touched upon. There is no exposure-based cover industry-wise. There is a need for that. And the Personal Data Protection Act will trigger a new kind of insurance, what we call is Personal Data Protection Insurance cover. Can we go for it? We don't have a cover for crypto jacking. We don't have a cover for a property damage. We did a survey recently, and that indicates that a lot of commercial customers that they want to have a property damage, because when the cyber attack impacts the manufacturing sector particularly, what happens is that there can be attack on the power grid, what has happened in Ukraine. There can be a physical damage to the machineries due to the computer attack. So can we have a property damage cover for that? Reputation risk is another major risk, and we don't have a cover for the personal financial loss of the directors, which is arising out of the social media map. And the technology is the only solution which can really provide. You can see recently African countries, they are using a Google map, and along with that, the satellite images, which can provide the live photo of any kind of a natural disasters. What you see is the flood, the condition in a particular region. The blue colors indicate the flood areas, flood affected areas. Now our Indian government also is implementing, this kind of CAT modeling with the satellite images. They will really play a very important role. We need to go for a risk pool. We don't have an successful risk pool in India, because what we have is a FairNet CAT pool. You can see the worldwide, most of the CAT risks were protected through a risk pool. We don't have a risk pool, so this really suggests for looking at a risk pool. Technology, of course, will enable people, knowledge need to be upgraded, upskilling is required. So that will bring out the efficiency, which will reduce the cost to a large extent. Intermediaries, also, once the knowledge level of the intermediary needs to be upgraded. Sir was talking about the roles the broker play in the coming years. I had seen the UK market, what role the broker play. I had seen in Dubai market, what role the broker play. You see that the broker doing everything, right from the product development to underwriting to claim settlement, everything is done by the broker. I mean, that is a kind of a professional knowledge that you will see that, in the coming years, the broker needs to develop. So these things will really bring, finally, sustainability. Okay, and one side, the customer needs are changing. So customer sensitivity will play a very important role. Every stage, the customer engagement is essential, which will really help the companies to, achieve the sustainability in the coming years. So this is what I just wanted to highlight to you. Okay, thank you very much.
Thank you, sir, for your thought-provoking deliberations. I now request my colleagues to present the bouquet and the memento to the esteemed speaker as a token of gratitude.
Thank you, everyone. Thank you once again for this enthralling and stimulating round of presentations. We will now begin with the third panel discussion.